Stop scrolling. I need you to hear this right now. Today, May 6th, 2026, AMD stock jumped 18% in a single morning. 18% in one day. And if you've never heard of AMD, or if you dismiss them as the cheap Nvidia, this video is going to be a little uncomfortable, because while most people were busy buying the obvious choice, the smart money was already somewhere else. Our frog saw this coming. Did you? Let's talk about you for a second. If you have any money in the stock market, a 401k, an IRA, an ETF, anything with tech exposure, you almost certainly own Nvidia, because for the last 3 years, Nvidia has been the story, the chip, the AI darling, the stock that turned regular people into people who won't stop talking about their portfolio at dinner parties. Nvidia this, Nvidia that. Jensen Huang on magazine covers, the whole thing. And look, Nvidia is a genuinely great company. The frog is not here to trash Nvidia. But here's the thing about everyone buying the same thing at the same time. By the time everyone knows it's a great investment, a lot of the upside is already gone. Enter AMD. And more importantly, enter what happened yesterday. AMD just reported its first quarter earnings for 2026, and the numbers are not just good. They are the kind of numbers that make analysts do a double take and quietly update their spreadsheets at 11 p.m. Revenue grew 38% year over year to $10.3 billion. Their data center business, the part that actually matters in the AI era, grew 57%. 57% in one quarter. CEO Lisa Su then got on the earnings call and casually mentioned that she is doubling her forecast for the server CPU market. Not adjusting, not revising slightly upward. Doubling from $60 billion to over $120 billion by 2030s. And the market reacted exactly how you'd expect when a company surprises everyone. The stock went up nearly 18% before most people had finished their morning coffee. Our frog would like to point out that 18% in one day is more than most savings accounts return in an entire year. Just saying. Now here's where it gets interesting and a little bit embarrassing for the conventional wisdom crowd. For years, the narrative was simple. Nvidia makes the GPUs that power AI. AMD makes the cheaper version for people who can't afford Nvidia. End of story. Except that story just got a very expensive plot twist. What Lisa Su explained yesterday is that the AI game is changing. In the early days of AI, everything was about training, feeding massive amounts of data into models to make them smart. That required GPUs. Nvidia's GPUs specifically. Nvidia won that round completely. But now we're entering the inference era. This is where AI models actually get used in the real world, answering your questions, running your apps, powering the agents that are starting to handle real business tasks. And inference requires CPUs much more than it requires GPUs. AMD makes some of the best server CPUs in the world. Suddenly, the company everyone wrote off as the runner-up is holding some of the most important cards in the deck. Funny how that works. Here's the villain in this story. And yes, there's always a villain. The villain is narrative. Specifically, the way financial media creates a single story about a sector and repeats it until everyone believes it. Nvidia equals AI, simple, clean, sellable. The problem is that real technology cycles are never that simple. The infrastructure needed to actually deploy AI at scale is enormous and complicated. It needs chips of multiple types, from multiple companies, solving multiple different problems. But nuance doesn't get clicks. So the nuance got ignored. And a lot of regular investors ended up overexposed to one company while a perfectly good alternative was sitting there, building its data center business quarter by quarter, mostly unnoticed. AMD's data center revenue was $16.6 billion in 2025. That is not a small number. That is a company that has been doing serious AI infrastructure work for years. It just wasn't the headline. So what does this actually mean for your money? 3 things worth knowing right now. First, if you own broad market ETFs like the S&P 500 or the NASDAQ 100, you probably already own some AMD. Check your holdings. You might be celebrating right now without even knowing it. Second, the question of whether to buy AMD today after an 18% jump is genuinely complicated. Buying after a massive single-day rally is historically risky. The easy money has already been made today. If AMD is interesting to you, the smarter move is to watch it over the next few weeks and look for a pullback. Don't chase the spike. Third, the bigger lesson here is diversification within a theme. If you believe in AI as a long-term trend, and the data suggests you should, owning only one company in that space is a concentrated bet. AMD, Broadcom, TSMC, Intel, these are all part of the same infrastructure story. The frog's humble suggestion is to look at the whole ecosystem, not just the celebrity. Here's the honest truth. The companies that win in transformational technology shifts are rarely the ones everyone is talking about at the peak of the hype cycle. They're often the ones quietly building the infrastructure that makes the hype possible. AMD spent years being dismissed, underestimated, and compared unfavorably to a competitor with better marketing. And then one Tuesday morning in May 2026, they reported a 57% surge in data center revenue and reminded everyone that there's more than one way to win an AI race. The Honest Frog respects that kind of patience. Even if it comes with a slightly smug 18% told you so, subscribe if you want to understand what's actually moving markets before it becomes the obvious thing everyone is talking about. That's the whole point of this channel. Drop a comment below. Are you team Nvidia, team AMD, or team I have no idea what I own in my 401k? All three answers are valid. I'll see you in the next one.